Hi everybody, welcome back to Ox Talks. It is Wednesday, November the 15th, 2023. I hope you're having a good week so far. So the markets closed today, they're up a little bit. All I can say is spread across the mainstream media sources is the continued Kool-Aid drinkers, all the hopium that things have changed now in the last 24 hours. The Fed is definitely going to reverse course and start cutting rates, telling everybody to go out and buy a house, take on more debt, be assured that the interest rates are going to be coming down real soon. But look, you need to look a layer under the surface and understand that this is a trap. It is meant, number one, it's misleading. You are not being told the truth. Under the surface, what has changed with regard to the debt levels that we are carrying in this country? What has changed with regard to, well, let me just say it this way. This country still has over $33 trillion of national debt. This country still has over $1 million per year of interest just to service its debt. This country still has some of the all-time highs for outstanding student loan obligations. This country has all-time highs for outstanding credit card debt. This country has all-time highs for outstanding auto debt. And that's not to mention the level of delinquencies with regard to the auto loans, with regard to the number of pre-foreclosure and foreclosures going on across the country right now. How about the millions of students that are deferring their loan payments and can't afford to make their student loans? So keep all that in mind. Don't fall for the mainstream narrative that things have changed because the CPI was a little bit softer than expected. Look, we're still nowhere near the Fed's 2% inflation target. And if you're paying attention to this stuff, you're going to understand, the same as I think we all do, that it's unlikely that the Fed is going to change course. And the cost of everything for you and I are going to continue to go up. We have a couple more warnings being put out there, which I read today. The first, again, we go back to Jamie Dimon. Jamie Dimon gave an interview to El Financiero, Bloomberg TV, and he says that he's not convinced the Fed's war on inflation has been won. He says, quote, "Personally, I think people are overreacting to short-term numbers, and they should stop doing that. Because when you look at all the adjustments that go into them, they are not completely valid," he said in an interview. What does that mean, they're not completely valid? Is Jamie Dimon basically saying, is he confirming that we're all being lied to and that these numbers are not what they purport to be? I mean, that's a question that we all have to answer and ponder. He says, inflation's, this is Jamie Dimon, inflation's probably a little bit stickier than that shows, he said. And he says the Fed could still bring interest rates higher and that people should be prepared for it. He says, quote, "I'm afraid inflation might not go away that quickly." So for all the cheerleaders on the mainstream that are telling you otherwise, please be cautious. Please do not take this as a sign that you can go out and take on more debt, or a sign that you should be rushing into buying a home right now or a new car right now or any of these things. Now's the time to hunker down. Now's the time to not buy into what is being paraded across the mainstream media TV screen on the nightly news. and with the stock market pumpers. The next article that I saw, which I thought was important, talks about the banks. And this is from Reuters today. It says, rating agency Fitch says on Wednesday that U.S. regional banks will face continued challenges in 2024, with banks focused on commercial loan growth disproportionately disadvantaged. What does that mean? It means that these regional banks are carrying a lot of debt that's tied to the commercial real estate sector. And these loans are coming due, they're rolling over. These owners are not going to be able to refinance into these existing rates, and they're going to let these loans go and these properties go back to the banks. And this is going to start unfolding. I think you're going to see in earnest next year. Don't forget, these regional banks are still holding a tremendous amount of losses on their books as well because of how high the yields have gone on the bonds. So we're in for another wave of bank problems. It says, quote, all U.S. banks will need to take defensive measures to conserve capital and provision for higher expected losses, Fitch analysts said in a report. Fitch cited scarcer opportunities for revenue growth amid a restrictive rate environment, rising regulatory requirements, capital costs, and a less benign credit quality. That means people's credit scores are also in the tank. It says the regional banking sector was in turmoil this spring as Silicon Valley Bank, SVB, abruptly collapsed after grappling with large amounts of unrealized losses spurred by rapidly rising interest rates. So you have another rating agency coming out and warning that banks are definitely not in the clear. You have Jamie Dimon again warning that people should not believe that the inflation is going to be gone anytime soon. I saw the last article I saw, which is really concerning. We've talked about this. Well, there's been news on this before. And it was out of the Zero Hedge. I saw it, I think, late yesterday. And it says U.S. beef prices hit record high as nation's cattle herd expected to shrink through 2025. This Brazilian processor Marfrig Global Foods SA warned the U.S. cattle herd will continue shrinking through the midpoint of the decade. Less supplies will pressure meat packers and keep the prices of steak and hamburger at elevated levels. And when I finish reading this article, I think you'll also probably take away that meat's going to just become, red meat's going to become unaffordable for many people, if it already isn't. And that is going to, from my perspective, spill over and bleed over into the prices on other types of meats, chicken, pork, things of that nature. So I think we're just seeing the tip of the iceberg here. Says during a conference call, Tim Klein, the head of Marfrig's North American operation, explained the availability of fattened animals for meat packers to slaughter and process should trough between 2025 and 2026. That means go down. He said this is because ranchers have not yet started keeping cows for breeding. Years of drought and high feed costs forced ranchers across the Midwest to send more of the cows to the slaughterhouses, leading to a sharp reduction in the nation's overall herd size. Listen to this. In January, the beef cow herd size was the smallest since 1962. It says tight supplies of cattle have hurt the profits of meat packers, including Tyson Foods and JBS SA. Also, U.S. beef exports, it says, are forecast to slide 14% this year from 2022 to 3 billion pounds, the lowest since the early days of the pandemic, when plant closures crushed meat packers. It says the USDA warned U.S. beef production is expected to decline further next year. And last week, Pete Bonds, a Texas-based cattle producer, said to Reuters, quote, "The future of this industry is not here in the United States. Food inflation remains sticky, and soon beef will be a luxury only the very rich can afford." So that's not good news. And like I said, it's going to have a reverberating effect through other types of meats as people go to the store and can't afford anymore to simply buy a pack of ground beef to barbecue some burgers for their family. I'll briefly touch on the aspect of estate planning. I had some clients come in today and they were updating their estate plan. I won't go back into the weeds on what all that means, but it means having a trust, having a will, having some powers of attorney, so people can make decisions for you, or your attorney in fact can make decisions for you if you are incapacitated. If obviously, unfortunately, you pass away, how are you gonna get your assets to your family and to your loved ones in that eventuality? So talk to a lawyer, consider having an estate plan put in place, have that peace of mind. Again, it is just one more thing that I recommend you consider as part of being well-rounded and prepared for all eventualities. And these people came in, they updated their estate plan. They realized that many of the provisions of their trust, which they had formed years ago, were really outdated, antiquated, and didn't apply to their family dynamics anymore. So in many situations, you will have many years ago maybe appointed successor trustees of your trust when maybe your children were minors that no longer are either alive, or you would no longer want to serve as trustee of your trust if you and or your spouse are unable to act. And maybe your children now become age of majority, and you would want them to handle these things. So, yes, it's important to have the estate planning documents done, but it's also important to make sure that you keep them updated. Similarly, with your powers of attorney, make sure whoever you've appointed as your attorney in fact is ready, willing, and able to step up and make those decisions for you. If you've had a falling out in a relationship or someone you might have appointed years and years ago, go see a lawyer, have this stuff updated. You don't need to do it all the time, but make sure you stay on top of it. Because it's important. And actually, I was talking to my client today about my trust. In the coming couple of years, we'll have dynamic shifting in my family unit that will also require us to update our estate plan, and we plan to do that. Likewise, funding your trust, making sure that if you have bought and sold assets or real property or businesses, that your trust is staying properly funded with those assets, and or assets that no longer exist are being reflected as no longer assets of the trust. Again, I'm not giving you legal advice here. I'm telling you to go see a competent lawyer that handles estate planning matters. And if you don't have that stuff already in place, consider getting it in place, especially if you have a family, you have minor children. It's very, very important. Laws from state to state vary on probate, but there's really no downside to having these things in place, again, to protect your family. With that being said, I'll leave it there, about 14 minutes today. If you're liking the content of the videos, please subscribe to the channel. Please share this with your friends and your family. Like the videos. I'm encouraged by the responsiveness I've been getting and the comments from all of you. I do try to read them every day and respond the best I can. So let's please keep getting the word out. Please do not fall for the stuff you're seeing put out there in the last couple of days that everything is fixed, because there could be nothing further from the truth. All of you, please get your exercise in today, your workouts, get your steps in, do some strength training, do some sit-ups, some push-ups, and get that water intake in. With that being said, I will see all of you tomorrow. Bye.